Many of you guys probably struggle to know exactly when to enter the market and when to really pull the trigger on your trade. One of the key factors to this is called a change in the state of delivery. And if you don't know what a change in state of delivery is, in this video, I'll show you exactly how I utilize change in state of delivery, how it correlates with sweeps of liquidity and displacement. And hopefully by the end of the video, you guys will get a better understanding of exactly what a change in state of delivery is and also be able to identify it on the charts as well. So a CISD, which is a change in the state of delivery, may look very similar to a breaker structure. The only difference is you measure a CISD off the candlestick body rather than the wicks. And like I said, once we get into the video, I will show you some examples and you'll be able to understand this a lot more clearer. So in front of us now, we have two drawn up examples of a change in state delivery and what it would look like. Obviously, it's not going to be as clean as these, but I just thought it'd be much easier to explain to you what I was saying earlier regarding sweeps of liquidity and displacement on this example rather than on the charts before we get into that. But let's start with the bearish CISD. So as you can see, we have bullish order flow, meaning that we're having higher highs and higher lows being formed, where then we finally get a sweep of internal liquidity of this last high here. So I marked that up as my buy side liquidity. And then we sweep that, and this will become our manipulation leg because we failed to displace higher. And then we also sweep this and fall back below this swing low here, displace back through. So like I said earlier in the intro, CISD needs to have context. It needs to have sweeps of liquidity, it needs to have displacement, and in here you have the sweeps of liquidity and then you have your displacement back below the swing low, giving you CISD. But the other piece of context it needs for it to be a valid CISD is liquidity lower to target. If you haven't got liquidity below, then the CISD probably isn't going to play out and it's not really a valid CISD. Even if you've got this full structure set up here without liquidity lower that hasn't been mitigated or taken, then it's not going to play out. So like I said, that's the bearish example. So we move on to the bullish example over here now. And again, we need that liquidity above to be able to target for this to be a valid CISD. So we've had bearish structure. We have lower lows, lower highs, lower low, lower high. And then we get our manipulation leg where we sweep this sell side liquidity here one last time. And we fail to displace lower, meaning this is our manipulation here. And then we spike back up and take this swing high, giving us our change in state delivery. We displace back through the swing high. And then, like I said, with the context above, when we've got external or internal liquidity to target, we can validate that CISD. It then becomes a valid CISD. So if you have, even like I said, even if you've got the structure set up, you've got your manipulation lower, you've got your displacement. If you have no liquidity to target above or below, depending on which way your CISDs fall in, then it's probably not going to play out. And you need that context there. You need that liquidity to target. So these are just drawn up examples, like I said. So let's get into some on the charts now. So now what I'm going to do is run you through a chart example of how to spot a CISD, what it looks like, and what I look for before to validate my change in state delivery. So a change in state delivery is the last series of downwards or upwards candles, depending on your bias for the day. If I'm looking for buys, I'm looking for the last series of downwards candles, meaning 2 or more bearish candles to get displaced through, where I would then mark up my CISD to look to take my entry. And the opposite for sells. I look for 2 or more bullish candles to get displaced through, where I then place my CISD. I'm a gold trader. I only trade gold. This strategy is unbelievable on gold, and change in state delivery for me helps me know when to enter the market and when the market wants to move, because gold can be very, very tricky, as you guys know. It can be very wicky, very volatile, and this is just an amazing opportunity to stop over trading and to stop getting wicked out or manipulated out of trades if you just wait for your change in state delivery. So like I said, I trade London and New York. Therefore, I will then be looking for manipulation during my London session. So it's 6 a.m. London starts at 7. What can I see in front of me? Well, first of all, I can see there are, liquidity, buy side liquidity resting here. I can see buy side liquidity resting here. There's a lot of buy side liquidity, which is good. It provides context for our change state delivery if we are looking for buys. What I can also see is there's a lot of external sell side liquidities being swept already. So there's one here, There's one being swept here. There's sell side liquidity swept here, and again here. So there's a lot of sell side swept, and there's a lot of buy sides which need to be taken. Therefore, just off that, my bias is probably going to be bullish. But the other thing that I can use to confirm that bullish bias is a higher time frame inefficiency. So what I'm going to do now is drop to the daily time frame and look for any inefficiencies, and I can see there's a bullish daily fair value gap here which we've respected multiple times before. So we've got a daily bullish FEG, meaning we're looking for buys, and we've swept external 1 hour sell side liquidity multiple times. So I'm definitely bullish on this trade. What I'm going to do is going to remove this big FEG, otherwise when I drop to the lower time frames the screen's just going to be completely green. So if I go back to the 1 hour, I'm now going to be looking for the lower time frames after seeing that we've swept external liquidity. And the other thing I can see is there is a bullish 1 hour fair value gap here. So we're inside a daily FEG, we're coming into a daily FEG, 1 hour FEG. There's buy side liquidity to be targeting, and we've swept 1 hour sell side. For me, I like to drop straight to the 1 minute personally. I like to look for 1 minute change state deliveries and take my trades off that. I'm an aggressive trader. I take 1 to 2 trades a day, and my success rate is really good, and I've had multiple payouts using this strategy. One thing I will say is if you've got sweeps of liquidity on the higher time frames, you've had them on the lower prices fractal. So I'll show you what I mean by that. Is, like I said, the 1 hour liquidity that was swept on the 15 minute, it's exactly the same. Prices fractal, it all moves together. What you'll see on the higher time frames, you will see on the lower. So now what I'm going to be looking for is to drop straight to the 1 minute. Again, remember we are in a daily FEG, sorry. So what am I looking for now on the 1 minute? Well, I can see that there are little bits of internal buy side liquidity. There's internal sell side liquidity here. So because I'm bullish, I want the market to come lower before going higher, meaning I want it to take this sell side liquidity and then displace back through, giving me my change state delivery, taking a swing high. If I don't get that displacement back through, taking a swing high, I will then keep waiting and see what happens. And then this is the beauty of change state delivery. You don't get taken into trades you don't want to be taken. So let's see what happens. Market opens up, instantly takes that internal sell side liquidity here, and we have not displaced back through yet. Still not displaced back through, still not displaced through this liquidity. So what I'll be looking for and what I'll mark up now is I will know there is sell side here, and obviously all this generated sell side liquidity here as well to bear in mind, because if we sweep this, that could be our final manipulation leg where I would then look to take my trade off that. So we'll keep playing this out, and boom, we've swept all this sell side liquidity here. We swept this sell side liquidity, and what's we done? We have now got our change in the state of delivery right here, because we've manipulated this low, we've displaced back through, we've also left an inverse fair value gap here, which was obviously a bearish fair value gap, which we've run through, meaning that order flow is looking to switch to the bullish side. It's just extra confluence if an inverse gets left, and it's extra power for your trade and the market to move in the direction that you were aiming for. So what I would then look to do is take my entry off this change in state delivery. If I mark that up as my CISD, I would go stops below my protected low, and then because we've taken external sell side on the 1 hour, I would then be looking to target external sell side, external buy side on the 1 hour. So I would just be looking to target around this area here, and I could also, because there's liquidity resting there, and I could also target these higher time frames and leave a runner, for example. So this trade for me would be a 3.4 RR. So let's see how it plays out and whether we actually get the tap. I know we've tapped it once, but if we miss that, or if you entered off there, then happy days. Play the trade out. Just come back down, give us 2 more opportunities to enter the market, and watch how we displace from the CISD. This is what I'm saying with the change of state delivery. It knows when the market wants to move. It tells you, right, from here the market will displace, and boom, it just flies. It come back down and we come back up, and if I move to the higher time frame on the 5 minute, you can see that price finally ends up displacing back to our buy side liquidity above, hitting TP for 3.4 RR. And just look how strong that change in state delivery held. It come back down and got retested many times, but it held very well, and every time it's tapped it, it's then displaced strongly from it, hitting our final TP target in the end for, like I said, 3.4 RR. I'm not sure whether this trade plays out any further, but my target would have just been there. I like to take intraday trades, meaning that I don't want to hold trades over longer than a day. So I hope this clears everything up, and what I'll do is one last final time I'll run through why this was my change in state delivery right here. The reason I marked this up as my change in state delivery, as it's the last push down series of bearish candles, 2 or more candles that get ran through and displaced through and sweeps and manipulates this low. I'm then looking to put my change state delivery on the body of the candle, not the wick, the body of the candle. That's the difference between breaks of structure. You go off the wicks, and like I said in the intro, with the change state delivery, you mark it off the body of the candles. So sweeps of liquidity, check. Displacement, check. Retap, change state, and we run through to hit TP. So I hope this has cleared things up for you. This is obviously a bullish example. It's exactly the same concept with the sell side example as well. You'd just be looking for a series of bullish candles instead of bearish candles to get ran through, and obviously you just target the external liquidity of the direction you are obviously looking to take your trade in. But there'll be many videos becoming after this. For example, liquidity, how to spot liquidity, generating liquidity, why market moves the way it does, fair value gaps, inefficiencies, equilibrium, all the sort of stuff that I know that helps me with my trading journey, so I can hopefully help you guys with your trading journey. But if you did enjoy it, please leave a like and obviously a comment of whether this helped you and whether this cleared anything up for you. Subscribe and send this to some mates you know could use the help with CISDs.